Hello, everyone, and welcome back to my YouTube channel. Well, my name is Kavya, and in today's video, I am going to talk about something really important and interesting. Well, I have a very interesting and an important question to ask all of you, especially those who are looking for a job or a job switch. This one's for you. So, the question is, are you job ready? Well, a lot of you asked me about how to prepare for Big Fours, how to crack the HR round or the technical round, what all topics should I prepare to excel in my interviews, or if I want to look for a tax role in assurance credit, or you want to enter into SAT, you want to enter into valuation, what kind of concepts do I start building on to enhance or increase my chances of getting selected? In this video, I am going to talk about one of those topics that is extremely crucial yet important when it comes to interviews, especially if you are from the finance background or you are looking for a role in audit, assurance, taxation, or in corporate finance. So, without any further ado, let us begin and discuss one of those very important concepts in finance. Well, first, I would like to talk about some of the job roles or the general roles and responsibilities for a financial analyst. So मैंने ये JD pick किया है from one of the jobs listed or one of the listed jobs in the market, and this will help you analyze कि आप इनमें इस position के लिए कहाँ पे stand करते हो and what all are the areas that we must focus on. So I have taken this as an example. So let's go ahead and see what all skill sets and what all topics are needed for this particular job role. So if you want to apply for a financial analyst role, you have to analyze financial data and provide the forecasting support. You have to organize data into accessible reports and perform various types of analysis using the key metrics. जो analysis perform होगा वो होगा financial statements पे, isn't it? And we have a wide range of financial statements and हर financial statement की अपनी importance है. If I ask you that which is the most important financial statement, let me tell you this is one of the frequently asked questions in interviews, that out of the three major statements, which is the most important? If you know the answer, let me know in the comments and I'll definitely come back to it by the end of this video. Well, as an analyst, you are always analyzing data. You'll oversee the financial functions such as assessing, auditing, planning, budgeting, tax, consolidation, cost control. So you not just review the financial statements, but you also try and find the reasons for the changes in those numbers. First, the year-on-year changes and the reasons for the change in the same financial year. You evaluate and analyze the capex, the depreciation, the proposals, investment opportunities, portfolio valuation, the rate of return that a particular investment can provide, the risk associated with those investments, etc. You have to do a depth study of a company's financial data to give advice for the guiding business investments and the overall financial strategy. So what do you think is the starting point when it comes to being a financial analyst? I would say it's a good understanding of all the major financial statements to begin with, apart from knowing the financial process or the accounting process and how we start making the financials after the trial balance is complete. Well, moving ahead. Moving ahead in today's video, I would like to talk about the need for financial statements. As I said that you will always be working around the financial statements. So let us see why a financial statement is needed in the first place. Well, financial statements क्या होते हैं? Financial statements तब prepare होते हैं जब एक bookkeeping process end होता है. जब सारे transactions have been recorded in the books of accounts, it goes through the process of journal, then it goes to the ledger and then the trial balance. Once the trial balance is prepared, we further prepare the financial statements. Financial statements आपको एक snapshot देते हैं of the corporation's financial health, that is the financial position and the financial performance. It gives insights into the performance, operations and the cash flows. आपको liquidity, operations, profitability, solvency का पता चलता है looking at the financial statements and also comparing the ratios that you calculate using these financials, isn't it? फाइनेंशियल स्टेटमेंट्स आर एसेंशियल क्योंकि वो आपको इंफॉर्मेशन प्रोवाइड करते हैं कंपनी के रेवेन्यू, एक्सपेंसेस, प्रॉफिटेबिलिटी एंड ऑल्सो about the capital structure or how much debt the company has in its capital structure, isn't it? Okay, so in short, just to summarize, it provides information about the earning capacity. Here I can link it to the income statement, right? Income statement मुझे एक idea देगा about what is the net income of the business. And I think studying the income statement as a part of the financial statement should be the first step. And that is what we are going to do in this video going ahead. The second important thing is to arrive at the information about the economic resources and the business obligations. A business might have debt out of which it has a fixed obligation in the form of interest. That is something we must take care of and compare the relevant ratios to arrive at the solvency or the profitability position of the business. We must also have information related to the liquidity, that is the real inflow and outflow of cash that is taking place not on the accrual basis but on the cash basis of accounting. The effectiveness of management and if the management is successful in disclosing the accounting policies. So all this is taken care of by the financial statements and the notes to financial statements. Now let me ask you that what are the various financial statements? Well, just to summarize, I hope most of you know this already. So I'll quickly cover this up that the first statement we prepare is the income statement and the profit and loss account. It is also called the statement of earnings, and the bottom line is the net income or the profit after tax, which is arrived by subtracting all the direct and indirect expenses from the revenue. Do you agree? Well, once the income statement is prepared, we then prepare the balance sheet or the position statement, which is also called the statement of financial position. It provides the snapshot or the financial performance, the financial, well, it also provides the financial snapshot or of the most comprehensive picture of a company's financial situation or the financial position of the business. Then the third and one of the most important is statement of changes in equity. How the equity or the equity and liability part of the balance sheet has changed. What are the additions and the withdrawal in the capital or the equity capital of the business, which includes the issuance or purchase of the shares, the dividends issued, dividends which are issued out of the net income of the business, and the profits and loss of the business. If you wish to know about the liquidity position and the inflow and outflow of cash, which are further listed into operating, financing, and investing activities, you look at the cash flow statement, which tells you about the firm's liquidity position from its day-to-day operations. Then we also must make sure that we look at the notes or the disclosures to the financial statements, जो एक annual report के नीचे दे रखी होती है below the financial, जो एक बहुत detailed view होता है on what is actually being added and subtracting to arrive at that one number. Moving ahead, ये तो हमने बात कर ली that financial statements are important, but what are the data sources? Where do we fetch these financial statements from? The official company's website serves as a very good starting point as a source of the financial statements. You can also look at the BSE and the NSE websites and see if the company you're trying to analyze is a public company and also has derivative instruments that are trading in the market. The central bank's website or the Ministry of Corporate Affairs, the World Bank database, the financial portals such as Money Control, Screener.in serves as a good method to begin with your analysis. Okay, so finally talking about the financial statements. Well, if we start with the income statement, let us first talk about what is an income statement. जैसे कि नाम में ही पता चल रहा है and हमने अभी डिस्कस किया that income statement is called the statement of earnings or the profit and loss account. It shows what the company's income and expenditures are and reports it during a financial year. Well, an income statement focuses on the revenue, expenses, gains, losses of a business. And the eventual objective of preparing an income statement is to arrive at the net profit or the net loss for a given financial year. Again, it is also known as the profit and loss account and the statement of revenue or expense or the statement of earnings. It provides insights into a company's operations, its day-to-day activities, and what the company has earned over the period of time or during the financial year. It provides valuable insights into a company's operations, the effectiveness of its management, underperforming sectors, and its performance relative to the industry peers. हम कंपेयर कैसे करेंगे फाइनेंशियल स्टेटमेंट्स को, या लेट्स से हम इनकम स्टेटमेंट को एक कंपनी के इनकम स्टेटमेंट को दूसरे कंपनी के इनकम स्टेटमेंट से कंपेयर कैसे करेंगे? जैसे आप देख सकते हो ऑन द राइट हैंड साइड आई हैव लिस्टेड अ फ्यू मार्जिन रेशियोज. So these margin ratios help you establish what these parameters or these metrics are or components are as a percentage of sales. I'll shortly be navigating on an Excel file where I'll be showing you an example on the same. So let us now directly move to an Excel and see how things work around and what a typical structure of an income statement looks like. As you can see my screen that I have mentioned income statement for the period ended. This means that the income statement is a flow concept. It considers the revenue and the expenses for the entire period and not at a point in time, but during a period or during the given financial year. So you always mention for the period ended, and for balance sheet, you mention as on 31st March or 31st December, whatever the financial year is. As you can see, we start with the net revenue or the revenue or the sales. So it is also known as sales turnover revenue and is the revenue excluding the returns, refunds and discounts. So if there is any sales return, we subtract it from the sales to arrive at the revenue. So as you can see, I have taken a hypothetical example where the sales returns are marked as negative. In general, we use the negative figures in a bracket or colored as red, which indicates a negative sign or a negative number. Once we have the net revenue or the total revenue after subtracting for the sales returns and the discounts, we subtract the direct cost, which is called the cost of goods sold or the cost of sales. This is the direct cost of manufacturing the goods and services and includes wages, electricity, and other overhead costs which are involved with the production of goods and services. So after we subtract the cost of goods sold, we arrive at the gross profit. Gross profit is simply net revenue minus the cost of goods sold, and that has been done for all the figures in the last 5 financial years. Well, once we arrive at the gross profit, then we subtract all the indirect expenses, which are generally called the general selling and administrative expenses, and are those expenses which are incurred to make the product available to the end consumer. These include electricity, advertisement, promotion, maintenance, office supplies, rents, salaries of the people working, compensation, telecommunication, travel, utilities, etc. After subtracting for all these indirect expenses, we arrive at what we call as the EBITDA or earnings before interest, tax, depreciation, and amortization. Depreciation and amortization is subtracted separately after EBITDA because it is a non-cash expense and does not lead to an actual outflow of cash. Well, depreciation and amortization में क्या difference होता है? Let me know in the comment section below. I'll be happy to read your comments and make sure that you answer it precisely and mention 2 to 3 points of difference. So once the depreciation and amortization expense is subtracted from the EBITDA, we arrive at EBIT. So D और A उड़ गया, सिर्फ EBIT बचा without the DA. EBIT is earnings before interest and tax. अगर कंपनी के कैपिटल स्ट्रक्चर में डेट है तो कंपनी क्या पे करेगी? उस पे इंटरेस्ट पे करेगी एंड वो इंटरेस्ट को हम माइनस करेंगे फ्रॉम एबिट व्हिच इज कॉल्ड द इंटरेस्ट एक्सपेंस. दिस इज अ फिक्स्ड ऑब्लिगेशन ऑफ अ बिजनेस which it must pay from its profit or loss during a given financial year. Once we subtract the interest expense, we arrive at earnings before tax. Earnings before tax or profit before tax is simply EBIT minus the interest expense. Then we also subtract the income tax which is applicable on the business in a given financial year. Income tax is calculated as a percentage of earnings before tax and is subtracted from EBT to finally arrive at the net income or the net earnings. Well, आप लोग मुझे comment section में बताओ that why. So I asked you two questions. The first question is the difference between depreciation and amortization, and the second question is which amongst these do you think is called the operating profit? Let me know in the comment section below. And in the next video, stay tuned because we will be discussing about the financials of Tata Motors and see how we can calculate these key metrics. So are you excited? Stay tuned for the next session and let me know in the comment section below the two answers that I just asked. Additionally, to help each one of you test your understanding of the income statement, I have prepared a short quiz on the same. The link is mentioned in the description box below. Go attempt the quiz and let me know your score in the comment box. If you have any queries with any question, also come back and comment down below so that I can answer that query in the next video. So if you found this video useful or if it was a revision of your concepts, like, share and subscribe. And keep watching.